Ladies and gentlemen, good evening, and respected speakers who needs no introduction here. Thank you so much for joining in. And I have to say, I'm really, really excited to sit here with you all face to face. It is only to be expected to start the discussion with what's happening globally. Maybe we'll start with what's happening with SVB and Credit Suisse. And also what's more and what is the impact going to be on Indian markets and Indian economy. Maybe we'll start in order, Mr. Jiten.
Thank you so much. Thank you for inviting me here to speak. Friends, I think she's asking me to begin with what's happening globally. And I think it's very interesting that whatever is happening globally is just reinforcing our thought process and our belief that India is on the right track. We could never have expected such sort of accidents in our system. It only goes to show how well regulated we are. I would only say that, we are blessed to have a very strong Reserve Bank of India, a regulator as good as SEBI. The Ministry of Finance is doing a very, very good job. And only one wonders that what's really happening in that part of the world, because somebody must have really worked very, very hard to take the market cap of Credit Suisse from probably 90 billion Swiss francs to 6-7 billion at its low. So I think this only goes to show how recklessly those systems are and, how risk management is actually not really played out there, how conservative our banking system is, how solid we are. And it only goes to show that, while we always thought that we were full of regulatory challenges in India, I today think that's a very big blessing. I think the West, especially Europe, is in a structural downturn, and it may take many decades for it to come out from where they are today. So I think it's, in a sense, these are all warning signals for us, but it's good news. India stands out very well. And I think being the country which is now looking one of the most prosperous countries offering such phenomenal growth ahead, this only makes our case better for being well-governed, well-regulated, and to actually be a country that should attract huge capital going forward.
Sure, sure. And I was watching one video in the morning and in which one of the industry experts said that all the, when markets are in a euphoric stage, nothing goes as disciplined. Only when the markets are bleak, everything goes disciplined and people see how disciplined it is. Nilesh, what do you think is the reason for such crisis globally? Is it because of no discipline in how the matters are dealt with globally, such crises happen?
In 2008, Nobel laureate Joseph Stiglitz made a statement about RBI Governor Dr. Y.V. Reddy. If Dr. Y.V. Reddy was Fed governor, subprime crisis would not have happened. Now I'm no Joseph Stiglitz. I'm unlikely ever to be a Nobel laureate. But I think all of us will agree that if Mr. Shaktikanta Das would have been Fed governor, SVB would not have happened.
I agree with Jiten. I mean, there is no doubt that the way monetary policy in India and banking regulation has worked over the last few years has been typical of first world style of functioning, which unfortunately did not happen in the first world. So it's quite an irony in that sense. But I'd also like to say this. It's often said, never let a crisis go waste. And I think that's exactly what India did, because we went through fairly volatile times with weak balance sheets at an aggregate level about a decade ago, perhaps. Post-GFC, when we saw a lot of NPAs building up in India, we saw a current account crisis as well. And I think post that, we've seen both at the government level as well as at corporate level, steps taken to sort of strengthen the structural fabric, whether it's business models of banks, for example, whether from a country level, it's the way monetary policy has been dealt with. And I think we are just seeing the benefits of that come through.